You are listening to the Cresco WealthCast, and I'm your host, Dimitri Korolis. I'm an advisor with Cresco Wealth Management, a division of Wellington Altus Private Wealth. The purpose of this WealthCast is really to bring those down-to-earth conversations that we're having not only with ourselves internally, but also with clients. Just want to bring you authentic, real coffee talk convos that we can all appreciate and understand. You can follow the podcast on Podbean, www.cresco.podbean.com, as well as my Instagram page on the Instagram stories and highlights, which is at The Finance Greek. Oh, I love Fridays. Fridays is podcast day. It's my favorite time. Why? Because we get to make coffee, get to sit around. I get to bring friends in. That's right. I call my colleagues and coworkers friends. And I have Jennifer Williams, the Jennifer Williams. You have a reputation. You're the killer in the office.
Oh, okay.
You're the killer.
Thank you.
You're number one. You've taken the top seat. But thanks for joining. How are you doing today?
Pretty good, thanks.
It's your first
Pretty
podcast.
It is my first podcast ever in life.
Ever. How are you feeling?
Pretty good. It's strange having a mic so close to me, but yeah, we'll see how this goes.
You almost hit celebrity status,
there
right?
You go.
Like that's why we podcast. So today you had a topic that you wanted to bring in, and it's not because it is a situational topic, but it's something that we do, that we have been doing, and something that you feel very strongly about in terms of education of why people should know not only what we're doing for clients and how we handle things, but what's available out there. Volatility is a word that it just gets thrown around. It typically has this negative connotation. It means that things are bad. And when we hear volatility, we got to duck and cover and hope for the best. And you argue that you can capitalize on volatility, that volatility just presents an opportunity, and namely you wanted to discuss covered calls. What are they, the benefits? I'll kind of let you take the floor. Let's see where this goes. But yeah, Jen, just hit us with what you got.
So volatility it's also actually on the upside as well, but you don't generally have to talk a lot about volatility when markets are going up. We're only going to be experiencing volatility more and more going forward, we feel. So in our investment committee meetings, we talk about, well, how do we capitalize on volatility and take advantage of it? Because it's not going anywhere. We don't want to be hiding from it. Yeah. One of the ways we do that is through covered call strategies. And covered call strategies do have a few different benefits. One being that there's long-term growth and you're also generating more monthly income. It's great when you have they've been around for years, for 15 years. We've been using them, but you're hearing a lot more about them. There's active management, usually within an exchange-traded fund that has covered calls in them. There's tax-efficient income that the premium that you receive from a covered call is taxed as a capital gain. So that's tax-efficient for you. Generally, there's lower volatility with exchange-traded fund that does have a covered call strategy in it. So when there is lots of volatility happening in markets, you can actually generate more of an option premium that's being received. Which would mean that your exchange traded fund isn't experiencing as much volatility because we're generating more income from that. And there's also the reduced downside risk because of that income that we're getting.
So I like that when you say the reduced downside risk, and I'll throw it here because one of the questions that I think we all get, or people will hear something out there, then they bring it to the table and they say, hey, downside risk, great, but what about the upside risk? Why would I use a strategy like this if all I'm doing is getting capped? And, I always say, okay, well, if you could predict the winner then, where you weren't getting capped, that would be you'd be 100% right. But it's really the point of why a strategy like that can be defensive and offensive at the same time.
Yeah, and I guess let me explain. I guess I should have started by first of all explaining, well, what is a covered call strategy?
No, you're good. We hooked them with the goods. Okay. That's how we do it.
Instead, I talked about the benefits right off the bat. Well, there's a simpler explanation of what a covered call strategy is let's use an example. So let's say that I own 100 shares of Bell Canada shares, and the Bell Canada is trading at around $65. So I'm going to write it, and it's called a covered call because I am writing an option on a position that I already hold, which is the 100 shares of Bell Canada.
Right.
So
Okay.
I will write a covered call strategy option on that for, let's say, 25 shares. And it's going to say, this option is going to say, I will sell this 25 shares if Bell Canada hits $70 within 30 days, we'll say. And you're going to like that deal, and you're going to call me up and say, well, I'll give you $1 for that option. And I'll say, sure, great. I get to keep the dollar. And let's say in that 30 days, Bell Canada goes to maybe $69, but doesn't touch the 70. Well, I don't hear from you ever again.
Yeah.
And I get to keep your dollar. And that is continually happening within the exchange traded fund. So we're continually getting that tax efficient income. However, let's say that within the 30-day period, Bell Canada has a great month and it touches $72. Well, you're going to call me up and I'm going to have to sell you that 25 shares at $70 that we agreed upon. However, I still have 75 shares myself where I'm capturing some of that upside. So, covered call strategies typically will, now this is compared to, the many broad indices. They tend to outperform in more of a range-bound market or even a bear market or when there, is quite a bit of volatility.
Yeah, absolutely. No, that's a great explanation, and so it's really the bet on both sides. Saying you're protecting on the downside, because then there's the adverse where you say, okay, Bell Canada goes from $65 all the way down to 60, and instead of losing on your position, you can compensate that premium.
Yeah, exactly.
Yeah.
So as you're experiencing some of that volatility, we're still generating income in the portfolio, right? Because I'm still receiving option premiums.
Yeah. No, I like it. And it's funny, we're always first to the dance, I find. I know that's a bold statement, but typically we are. But we're always first to the dance. And I just think with the nature of volatility, the way that algorithmic trading is happening, so on and so forth, that these strategies are going to be almost a necessity from a behavioral standpoint. I was having a conversation yesterday with Wayne on the team, and I was just saying, listen, Wayne, I go, once you start compounding the new applications, software, I mean, we can get into the Chat GPT. I won't go on that for today, but once you start getting into these things, volatility inherently is just going to happen. And so, one benefit, like you say, is capturing the upside. But what other benefits are you finding that aren't just maybe at face value, but in your assessment and recommendations?
Well, I think one of the biggest benefits I would say for especially a retirement portfolio is knowing the cash flow that you're receiving off of that portfolio.
Good
So,
point.
Optically, it never feels very good when you're checking a monthly statement and there's been some volatility and, you're seeing the positions down, but it's comforting to know that you're still generating significant income into the portfolio. Yeah. And we're always looking to grow that as well. We talk on volatility, and I always like to give the example that, my phone can be buzzing all these different news wires at whether it's 5 in the morning, 6 in the morning, and then by the time I'm going to bed, it could be buzzing something,
Yeah, because now you're getting the different time zone.
Well, exactly, but it
on
can
TV.
be buzzing
Yeah.
a different message at 6 p.m. by the time I'm going to bed. So just the news feeds that I'm getting can be very different throughout the day, right? From morning to evening, and markets in the short term don't like uncertainty, and the news and mainstream media can create more of that for us. But it's not going away, like I say. So we have to just be able to take advantage of it.
Yeah, and there's a difference between And again, it comes down to risk management. And so where we suggest, we're not going out making all these bets with these people and, trying to time the stock price. It's, you still stick to the mandate, stay disciplined, good quality companies, sticking within the portfolio, but doing it in a responsible way. Like I say, we've been doing it for a long time, whereas, now it's, become that flavor of the month. So, we have to point it out there. We are trendsetters here. The thing is Jenny, we could talk about this till the cows come home. And I like what you talked about in terms of income and not getting handcuffed by volatility, where let's say take a scenario where markets are depressed, but still relying on that steady stream of income. The bottom line is that everyone's different. I think if people really want to understand this even that much more further or an assessment, they got to give you a call. Right? They got to give you a call and say, hold on, you know what? Explain this to me. Because some people will get it. Some people, maybe need a little more of an education. And that's what we're here for, priding on education.
Yeah. And we can even go, we can save another podcast for, even some single stock exchange traded funds with covered calls and maybe a little bit of leverage in there for some of the younger generation.
This is why they need to call you. This is why we need to call you. Do we do the number? Do we do the phone number? No. All screen calls. No, thank you very much. Hope you found this informative. As we said, you can download the podcast on the Podbean app. That is cresco.podbean.com. You can also find it on our social media channels at Cresco Wealth Management. And if you're nice enough, you can follow me at The Finance Greek. I have all the same information, the podcast as well as the posts and information, how to contact Jennifer. But you can go right to the website as well, www.crescowealthmanagement.com. Thank you.